pacing platform. So the pacing platform is not something that like it's kind of like a key data light. We probably won't dig into that here because we don't have your portfolios here, but I do talk about pacing a lot, and our business intelligence tools are for the most part free. You don't have to be a Wheelhouse pricing customer. So if you're looking for obviously just access to a second source of market data to compare to whatever you're looking at, or you're looking for some tools to be able to see daily pickup, same time last year, be able to compare to some market data. Our business intelligence tools are all free, actually. So, Jared, for you, if you're doing revenue management for other folks as well, and you're looking for some additional BI tools, might be something interesting to explore because you don't have to be paying for that. But obviously, we're always open to a conversation about using our pricing platform. Um, so I'm going to start here on one of our market reports. Market reports are also a free product. They tend to be pretty high level, right? You can see we're looking at a pretty large area for the market report. You can't in this platform dive into more specific subregions. We have a different part of the data platform for that, but it is good to just see like really high level trends about what's going on, which I find, when we're talking about kind of market conditions at a strategic level, you only need to go so high, or you only need to go so granular. This is free. Anyone can access it. All you have to do is make an account. Um, and before we kind of dive in, sorry, I got a text from that Comcast person or whatever. How have things been going in the market for you this year? What is your guys' experience in the market?
Guess I can go first. I'm having a banner year here in Tampa. A bulk of my personal portfolio is sitting on the Tampa Bay side, not necessarily the Pinellas side, so more Hillsborough County, away from the beaches. And that does offer us some protection from volatility, not being a traditional tourist market with beaches only. Uh,
Hmm.
Now, that being said, obviously, I do have some listings out there on those beaches, and I'm watching what they're doing, and they're not doing so well this time of year. I mean, we are coming from sort of a hangover. This same time last year, we were hit by two major hurricanes that really shut a lot of things down. But with hurricanes and disasters like that, we did see sort of a boom this same time last year. Our down season turned out to 100% occupancy because we were taking in refugees that needed a place to stay because their homes were destroyed. So that did lift revenue last year, and then so year over year comparisons are a little blurry because of that, because things seem to be normalizing now a year later. So we're getting back to our traditional sort of occupancy for this time of year. But I will say my revenue management strategy for our market here is a little bit of a hybrid. We do try to capitalize on peak season, and we do that very well. Our occupancy numbers are stupid high. Uh, but in the down season is really where we save the day because we shift to that midterm strategy. We alter and adjust our pricing to get that 30, 60, 90-day stay that really stabilizes us and breaks up some of that choppiness of the low season. So overall, I mean, my portfolio sits about 80% occupancy for the year. We're probably up $450,000 this year compared to last year. Some of that is new inventory coming online, so it's not all attributable, same units, year over year. But we are doing really well. I'm seeing a lot of consolidation happening in this market. A lot of active listings have dropped off. I do own a real estate brokerage, so we manage properties that are short, midterm, long-term, commercial property. But seeing all of that different unit mix kind of gives me a better signal on what's happening. I see a lot of people have dropped out of short-term rental this year, and some people are taking their units and placing them in sort of more steadfast hands as well. So, good operators are really sort of taking the cake here. Um, I like what I see. All of the trends that I see so far are really good for us. I think a drop in active supply is sort of given us a boost to our ADRs. Uh,
Hmm.
I think demand on the Tampa side, at least, is higher than it was last year. Our average length of stay is right at 8 days. So we're, getting away from the shorter stays, getting more of the longer stays, increasing that occupancy. I think we're doing what I hoped we would have done this year, and we're still growing our portfolio too, which is kind of crazy. My short-term rentals are actually making more money than long-term rentals. Long-term rental prices are falling in Tampa. A lot of active supply is coming onto the market for long-term rentals. People are switching from short-term to long-term or selling their properties. So I'm seeing all of that, and I advise a lot of people they reach out for long-term rental management, and they either have a failed short-term rental or maybe they have, their eyes are just solely focused on long-term rental. But when I wave that revenue estimate in front of them and they realize how much more they can make as a short term if they did things the right way, then sometimes that pushes them over the edge. So I'm winning. I mean, I just picked up 6 units in the last 8 days. So like we're seeing rapid expansion in the portfolio. The revenue numbers are killing it year over year for the last 12 months, every single month. Uh, Revenue on the books is way higher than it was last year. Every KPI is green in the green right now. So I think we're doing really well. I think this market is really good for solid operators right now.
That's good. That's good. One quick question before we hear what else is going on. Is the midterm strategy, does that work on your beach properties too, or is that mostly just your like city properties?
No, it does. It hardly ever works over in I mean, some of them do. Like I have one unit in Largo that I've got a 90-day medical stay, but like that's a rarity. That's not that's not the case normally. And I work hard off platform and through my network to fill those units with people looking for those. So it's like you're not gonna get normally on the beaches, especially on the beaches. We don't really get that 30, 60, 90-day stay type in the down season. But if you're off the beach, maybe a little bit inland, you can show some value to some people. If your pricing is right, I mean, what is it? Blue Ground? Like I've got reservations for Blue Ground, for Seminole. And those are like month-long stays in the down season. Like that's almost unheard of. I don't know a lot of other people who are doing it that way, but I'd rather have 5,000 a month than 2,400, because I only got a couple weekends booked. So switching to that midterm strategy in the down season, been doing that for about 4 years now, and it seems to stabilize the portfolio and really pump up our numbers.
Yeah, that makes sense. That
I
sounds
have a quick question about that because we're
yeah.
the other side. We're Pinellas. We're up and down the beaches mostly, and we have some inland homes like Largo, Seminole. Um,
Mhm.
we just took a first couple like listings that we're going to try the midterm because a lot of the beaches have strict guidelines,
Mhm.
and a listing that we just took is a 30-day minimum. Where do you advertise to get those? I mean, I know it's definitely totally different on the beach, but like we're actually going to do furnished finders. We just signed up with that. I don't know if you do that one.
I stay clear of furnished finders, and that's just personal experience. It's anecdotal, and I don't know if this works for literally everyone, but in my experience, furnish finders, I hope none of you know nurses or care about them, but I've hosted over 1 million guests in my career, and anytime we ever get these travel nurses, every single one of them has an emotional support animal. These nurses, they don't put them in kennels while they're gone. These nurses work on a hospital floor for 12 hours a day, and that dog is just left roaming around inside that unit. They destroy these units, and it's no joking matter. People have mental health issues, but I just see it on average. It's always way higher with these travel nurses. Some of them are a little squirrely, and they're harder to deal with.
Okay, good to
I
know.
just
Thank
I,
you.
I just don't see them as the most valuable guest for us. And so I stay away from that. I know what they make for per diem. They use GSA rates. I'm not stupid, but they don't want to pay all of their per diem to go towards lodging. So even if you're looking at their per diem rates for a month, you price it somewhere in that range where they can afford it with just their per diem. They want to pocket about 30% of that. They don't want to give you all of their per diem. And so they want a lot for nothing. They're high touch guests, and their animals are generally not well behaved and cause damages. So it's just not a great fit for what I want as a guest.
Good to know. Thank you. Because I haven't, ours are just really short. We specialize in 2 week and under rentals, really a week and under. And so this is kind of a whole new thing that we just took, and I don't even know if it's the right fit for us, so we'll see.
It's, I guess, it probably has a lot to do with like your PMS software that you're using. I know Guesty, which is what I've been using since 2017, does not have a direct integration with Furnish Finders. So for my distribution strategy, we usually work on distribution in the off season. So like right now, we like to add more partners, and if it's not in the Guesty marketplace, and I have to jump through extra hoops to go through, reaching those guests, it's kind of not interesting to me at least. I'm sure.
Mm,
I mean, you've got 90 something units. Like, can your guest team, can your guest, we call it guest comms, but can your guest comms team like add that increased bandwidth of going to another third party website just to check and see if you have inquiries and things like that?
right.
I just kind of want to streamline it for them, and it just doesn't work easily for us. So not to
You
say that
mentioned you have a pretty big direct network on those too, right?
for the
Like
for the
for the
midterm,
midterm stuff.
absolutely. Well, I've
And
got a pretty big network here in Tampa anyway, and so I know a lot of people that are here. So I always have people reaching out to me personally, just on my cell phone. Hey, Jared, what do you got? What do you have available here? And so that normally fills us completely. Like, I'm not at a loss, I guess. Like, I don't have units just sitting out there in the open, but I do price them so that they are appealing for long term or longer stays during this time. So
yeah,
it's not like, I set it to just normal rates and then magically get them filled. People are looking at long term rental, the cost of moving, all of these things, setting up security deposits for utilities, like that cost is high. And if you make it easier for them, but still appealing, you can still turn a good profit during this time of year, even though your rates are stupid low.
yeah. The I think any midterm stay strategy, there's not a lot of companies, Angie, who are like fully supporting themselves off of transient. It's just not quite established yet. Airbnb obviously is trying to establish more, but when we look at like, you know, for beach destinations, you see a lot of folks who have like what they like snowbird. So there's like a season where they get a lot of people. The majority of that is business that they've developed year over year and then market specific rates too afterwards. So it's kind of like a long-term play usually. It's probably not going to be like, oh, we'll go down these channels and suddenly we'll fill up our low season. It's, hey, we have made some people. We tell them to tell their friends. They do this. You build a network. You really want to watch people who are coming. There's another element where, like, really for any reservation, if someone uses a business email, let them know you do have like long-term rates for business people. That'll be a little harder because you're on a beach. But like, if you do
Right.
notice, especially that someone does take a longer stay and use a business email, let them know, right? That I think works better in a city because usually people are coming for vacation if you are going to see that, but like capturing those kind of like folks, um something that I think a lot of people do in urban environments. But if you have any construction nearby, just go talk to the foremans. Let them know like, hey, we can put you up over the winter. Construction workers are great. You can usually just walk onto a construction site and let them know. A lot of urban people. I always suggest that to urban. When we were at Stay Alfred, we did that all the time. We asked our
That's a
city
good
managers to
idea.
always walk into construction sites, and they can be small too. Like if you know housing developers, that often they're bringing in carpenters, painters, things like that. They're a great resource to just fill stuff up. And sometimes they're like, depending on how big the project is, sometimes they'll get a place for a really long time and rotate people through it. So, and usually they're much better than nurses. Those folks are gone all day and tired, and
Yeah, I
being
actually
a little
didn't know
hard.
that about nurses because this is kind of new to us. We haven't marketed to that at all. So that's a really good insight. Thank you.
Yeah. The other thing too is I think for the transient side, the channels that are probably going to be best are probably going to be like Airbnb still for just like transient bookings. Otherwise, it is the real estate sites. The big real estate sites where, and you're going to have to feel like your res team's going to have to field the inquiries in that case and just like kind of talk through it. I think a lot of this business is still interpersonal. All of the big companies that do like corporate or midterm stay, they're doing some kind of sales network, right? And so if you think of it that way, um, you can build it up, but there is going to be some like sales investment. Like Jared's talking about, he is like obviously the guy who's at the head of that network, right? And it works well. So as you develop it, it can be really strong in that regard. If you're just looking to get some bookings, initially, Airbnb is probably going to have the biggest reach for that. They've been pushing it. There still is a gray area where they're like, technically you're establishing residency, so you are absorbing the risk of an
Right.
eviction. But for the most part, people don't have a problem with it. Otherwise, we would not see people do it.
What real estate sites would you advise? I also have my real estate license, so I have put some like on the MLS, but I know like long-term rentals on the MLS aren't really.
Yeah, not really like the MLS, but it's like the what are the sites that like why can't I
Can
let
I
yes, please.
interject real quick? So I always wanted to put my units on Zillow because Zillow's got tons of eyeballs,
Yeah.
right? How do you get it on Zillow with the least burden on the short-term rental operator? Work on your distribution network and bring in Blue Ground as a distribution partner, and Blue Ground pushes out your units to Zillow. And you don't have to update your pricing for the month. The pricing, say in March, is going to show whatever your March pricing is. And then in your low season, if you're seeking those longer term stays, Blue Ground will push out your discounted rates for low season, as long as you've priced them for that, obviously, right? Blue
Mhm.
Ground's going to push it out to Zillow, and they will field the calls from the tenants or the prospective tenants, and then they will book them. Those tenants pay Blue Ground. Blue Ground pays you. So you're not the merchant of record, which I don't absolutely love, but it is a great distribution partner to get your units on Zillow, which does get a lot of eyeballs.
Okay,
Great
interesting.
advice.
Thank
And
you.
Zillow was the one I was looking for, like those the ones where people rent, right?
Yeah,
But that's I think Blue Ground used to manage their own properties, right? But they kind of pulled back on that over the last few
they,
years. Now they're just
they did.
operating.
Yeah, now they're just looking for third party partners to increase their total unit count.
They became a sales network.
Yeah.
Yeah,
But they
which
did
makes
have the
sense. That's how all the big
technology.
ones are.
They had the technology to get it onto Zillow. So anytime you see, like if you're searching on Zillow and you see these for rent units that pop up, and then right underneath sort of the photo of them, when you kind of hover over the little purple dot, you'll see like a series of numbers and letters, alphanumeric. You can easily identify, okay, that's a Blue Ground listing. And so there are not that many people on Blue Ground, but I will say there's also not that many travelers. It's just another way to get your property out there. So like maybe on a portfolio size of like mine, 41, I've got two guests staying with me right now for Blue Ground. So only two units are booked through that, but that's two more than I had before it. So
Great.
it's something, but it's not everything.
Yeah. Well, this has been great. Why don't we hop into a little market data and then we can pick up a little bit more conversation. But that midterm, the midterm experience is really interesting. So a huge bolster to that low season. One thing to note, I don't know if Tampa actually has a much of a snowbird for
Not as much
the
as the
beaches.
beaches, but that's kind of a different guest too. So it depends on what your portfolio is made up of. The
Yeah,
snowbirds are not booking like 8 bedroom homes. They're
no,
booking like one and
they tend
two.
to be pretty low value.
Yeah.
And honestly, it's a pretty damaged segment right now. Um, because costs have gone up so much, and basically, I know across the Panhandle, the Canadian traveler is just gone, right? They're non-existent, and that was a segment of that business as well. Interestingly, last year when I was in Europe for the conference, I heard that American snowbirds are starting to go to Portugal, the ones that have more money, which is interesting. Um, and because they were talking to me, I brought up the term, and they were like, I had never heard that term until like 2 years ago, but now we get all these people, and that's what they call themselves. And we're like, okay, whatever.
I don't know. I think
They were
it
pleased.
that pattern follows the Dixie really well. So like when the U.S. dollar is really high compared to other world currencies, then you'll have some drop off in tourism. But if the dollar decreases in value, then you'll get more inbound from international markets. So the dollar's falling right now, so I would expect international tourism to pick up a little bit more. But last year the dollar was stupid high, so we
Yeah.
saw a drop off in international tourism.
Post COVID, the United States has never really recovered our inbound um, international travel from the pre-COVID time period. And in addition to that, we have increased our outbound. So we've been running a pretty big deficit on like travelers out between inside and outside the country. This year, as probably you can expect from reading the news, international travel is fairly damaged. It's not damaged across the board. Canadian travel is gone. So basically, if you have a Canadian travel segment, you're probably struggling. This is visible across the Northeast. So, like, pretty interesting. I'll pull up. Did this just freeze up on me? Um, some of the trends across the country have been fairly similar this year. Like, basically, uh, if we were at the end of 2024, pacing for 2025 was looking really strong. January, February in most markets around the country, setting aside like ski markets because they're operating a little differently, um, did pretty decent, but a lot of people were in low season, so you wouldn't have noticed that it maybe was up slightly in terms of occupancy and demand. By the time we hit March, almost every market in the country just starts to come under occupancy pressure. That occupancy pressure can partly be attributed to like Easter, but not all of it. And then for a lot of markets, that occupancy pressure just continues all the way through the spring. So you don't, even if you get a bump for Easter, it doesn't make up for the shortfalls in March. This will be a little different when we look at Tampa. You guys have quite a bit different seasonality. Um, but basically, there's just consistent occupancy pressure across most, especially southern markets, but also really just every markets across the country. When we get to summer, some markets start to recover in terms of like occupancy. So across the Panhandle, you see them kind of bump back up to being able to reach year-over-year occupancies. A little bit across the southeast coast, you see those occupancies kind of recover a bit, but this is where we start to deviate. The West continues to just be under occupancy pressure. Basically, every month since March has been down in occupancy. The Northeast crushed, right? Their summer down double digits, basically in occupancy. And that's mostly because of the kind of international travel that's probably not coming. And also, they tend to, I think cost affects it, but that's where we start to deviate. Pretty much the first quarter, everybody's down a bit. Second quarter, I mean. Once we get into summer, we start to see it recover. Then, on a kind of like a national level, these are big trends. It's not going to be true in every market you look at. As we've gone into September, almost every market I've looked at has been trailing pretty substantially. September really like something changed in August where July, in July, the fall was pacing ahead. By the time we get to mid-August, everything starts to flip and start pacing behind, right? Um, and so pretty volatile year, right? But when we look at these trends, so what I'm on is the trends section. on this market report. So we're just seeing month over month, year over year. I have multiple years. I just am looking at this year, last year. For right now, I like to use occupancy when just making high level kind of strategic trends decisions because it's just a good surrogate for kind of demand. You can, obviously the supply is involved in that, but you can kind of see how things are. I also think if you're talking to owners, it's a really useful chart to use. I often tell people restrict talking about market data to occupancy with owners because they can usually understand it. It's pretty simple. If occupancy is up, things are probably going well. If occupancy is down, it's probably bad. Right? They at least can understand that, right? Um, and we see some kind of similar things here. Like January. Now, this is going to be a little different because right now, one, we're looking at both the city and the coast, and I imagine that they have a little bit offset seasonality, right? Where that do you see stronger summer across the beaches than maybe the city does, and the city probably sees stronger spring, fall? Is that true? That's an assumption I'm making, just looking at a lot of urban environments that tends to be the case.
I would assume that's true. We have good summers on the beach, even though I don't want to spend the summer on the beach here. Other people do.
No, you're not wrong. As a local, no, we try and stay away from the beaches during the summertime. Like right now is the best time to go to the beach, in my opinion. But I would say right now, like summertime was okay. It it was great in 2023. 2024 hit and we had so much flooding. So like imagine like 50% of the active units on the beaches get demolished because everything on the first floor was underwater. And so you had a restriction of supply, and then whatever was left, of course it got booked, just there was no availability and supply. So I would say this year I'm having a better year on the Tampa side than I am on the beaches.
Yeah, that makes sense. I do have 2023. We can see that bump there. Obviously mentioned the hurricane as well, which can affect occupancy year over year. But
Yeah,
I do think we do
that's
see
great.
some of these trends I was talking about, which the year starts out pretty strong. So kind of following this national trend, start to see a little pressure in March. Now, interestingly, this market does make it up. So remains pretty stable through this like kind of Q1 high season. But then you start to see this occupancy pressure kind of across the board, May, June, July, into August. Um, just kind of consistent occupancy pressure. One note, Angie, is we are, and we're really for both of you, we are looking at all properties in the market. So I know you also have key data. I always like to mention that key data is a great tool as well. You usually get a little different view on the data. Key data tends to be professionals. So it's a lot of, actuals for people who are reporting data. So you get to see kind of like a certain segment of users, often much more on the destination, like kind of beach side rather than like urban operators don't always work with data providers, interestingly. In our data, we're looking at kind of everything and we have a mix. So we have our direct data from all of our clients. We have a lot of host direct data that we get from certain white label solutions we do for pricing. And then we also are analyzing the just listing data, so the scrape data. We're getting kind of like a whole big picture mix here. And so sometimes you'll see a little differences. One thing I usually like to point out here is, if we're looking at the entirety of the market, market occupancies tend to be a lot lower than you might expect.
Mhm.
When looking at like key data, you're seeing professional occupancies. We'll filter down into this a little later, get to a higher level, but I do like to bring that out that professionals, I agree with what Jared said, and I think this is especially true going into the future, which is professionals are much better positioned right now. They are doing much better than the markets in general. And I think they're poised to basically consolidate market share from all of the people who had basically come into the industry post COVID. If they haven't established a foothold and they're not really trying to suffer through the money not being quite as easy, they're getting out. Their owners are scrambling to pay their mortgages in some cases, and professionals are just doing better and in a position to take those properties and grow.
Yeah.
See that probably in key data where these occupancy rates are probably much higher than what we're seeing at the market level.
Yeah, I was actually looking. I don't know if you see me looking at my other screen. I was looking at key data while you were talking. So I see the little differences, but it's nice to see both views and compare.
Yeah. Um, Looking forward, I did look at September. September doesn't have as much on the books as I would expect here, but it's really not. It is still pacing behind a little bit. It's not pacing behind as much as other markets I've seen, but we've got like a week left. This data will be updated in a few days, so 10 days, like a third left, but it's only about halfway there. It's going to probably have a shortfall, and that shortfall is probably going to be play pretty similar to these shortfalls that have been happening recently. So that seems to be just kind of a consistent trend. There is less occupancy going around for the market at large. This shortfall is nowhere near as bad as I'm seeing in other places, though. We're talking people are like under 50% still with, or just, like with a week left in the month from where they were last year. It's September. I don't know what has changed in September. I don't know if you guys are seeing it or feeling it, but
Can you compare 2023 to 2025?
yes.
So
2024 is weird because we had all the storms.
yeah,
Yeah.
so
You can see that in the occupancies, and you can also see it because the booking window data is really weird for last year as well. The pacing really isn't off after that point, but it's like you only have short-term bookings, right? Because there's a big chunk missing.
it's
Um,
kind of an anomaly that we kind of have to smooth out, but somewhere in between 23 and 2024 is the real sort of benchmark target for me, at least.
yeah. Yeah, I think that makes a lot of sense. Uh I don't, it's hard to deal with events that interrupt stuff
Yeah. Yeah.
in data, right?
I had to
Generally,
very much separate my markets because I have inland homes that all got like 100% occupancy the end of last year because, all the beaches were down and they, all of those got booked immediately. And then I have all the beaches, all my beach properties that flooded and complexes that went down. So my data is like a disaster from last year, these
yeah.
next few months.
Yeah, there's kind of just like a guessing game. I think what Jared suggested is probably from if you're looking at particularly booking window occupancy, so like booking curves to develop pace, that market level 2023 data is probably going to be the best source for the months that were most affected by the hurricane situation. And you said a lot of properties were like closed or damaged.
We had like at that time, we probably only had maybe 60 properties, but we had probably 10 of them go down completely from flooding. And then we had all of our complexes lost the pools, the elevators. So everything, really everything was down for a time period.
It'll probably impact this next year. And so the exact numbers are not going to be like right. I think occupancy you can still use if you use that previous year. And definitely like occupancy booking windows to at least give you a target where we're looking at pace and saying like, let me go here. If we pulled up 2023 uh, lead time for October, what is that? I have this written down somewhere. How far away is the end of October? The end of October is about 37 days plus 5, so 43. It's like 67.9%. So 33% was on the books by this time. Um, that is going to be probably a better pace than whatever was happening in 2024, right? Which, we can do that
Did you
calculation.
say 33?
Yeah, roughly.
Well, I think the numbers for as far as booking curves go, like we saw booking windows drop to like 6 instead of 26. So at least in the Tampa side, everybody's scrambling for last minute reservations, trying to get something booked for the down season. That really started in September when those hurricanes hit. And then you know, traditionally it'd be like a 26-day average booking window for, sorry about that, got a garbage truck going by. About 26 days in advance, people would book for September, October, and then it went down to like 6 because, but then everything was fully occupied. So it's just an anomaly that we kind of have to just like throw that data kind of out the window because you can't bank your revenue management strategy on a hurricane, you know?
Yeah.
No, it puts you back into kind of like a blind spot of almost like starting new properties or starting a new company for a little bit. Although that pacing data does, like looking at these 2023s, I think can give you at least some benchmarks to go against. This is pacing a little bit behind 2023 right now. Interesting thing about the booking windows though, is some of these booking window trends are happening kind of nationwide. There's like the exact numbers are obviously going to be different, but there's kind of something we've been seeing, which is really far in advance booking remains exceptionally strong all year. It's continued to be strong and continued to outpace. Where like, hey, people booking for next year or for 9 months out is up. That middle booking window that used to be one of the strongest booking windows, depending on your property size, kind of like 60 to 90, 60 to 120, that has consistently gotten weaker. Like there are less people buying in that time period, kind of across the board. I don't know if you guys watch the revenue management roundtables that we do, where we bring revenue managers on. We actually have one later today, so feel free to join or check out the Wheelhouse YouTube where we have them. But that has been a consistent thing that's come up with some of these enterprise revenue managers that have talked about this missing middle, where that middle booking window that used to be the strongest booking window, where you'd optimize your rate position the best as well, it's just weaker, significantly weaker in some cases. And then the short-term booking window is a lot stronger, but ADRs are by far the most volatile in that position and often lower this year. But that booking window shift to both ends of the spectrum has been happening. It's definitely shifting more towards the short than the long. Um, that's been a trend that's pretty much been happening countrywide all year. No clear silver bullet on why. I have some hunches. My hunch is it's, obviously a mix of things. Some of it is just consumer behavior. People are planning shorter. I think a lot of it is consumer sentiment. It's like you can plan you can compartmentalize the far future to be able to buy, because you're basically buying futures when you buy travel. It's like to plan travel. You can also make an impulse decision, but people are having a hard time like wanting to commit to something too far out. Brett Robinson over in Alabama noticed that they see a really big drop off when their deposit policies change from deposit to pay in full. So it could just be economic. Like theirs is about 60 days. When they hit 60 days, which used to be a prime window for them, they see a ton of sales drop off just because people maybe don't have the money to pay in full at but they're more than happy to put a deposit down. So they see a big change on that. They haven't really come to any conclusions on what to do about it, but they have a hunch that that might be something. Um, and I think another part is, generally speaking, almost every market I look at in the country, people are just overpriced. Like our industry consistently overprices outside of the short-term window. Part of that is because we have a lot of smaller, it's an entrepreneur-friendly environment. People don't have the resources, I think, to look too far out, so they really only effectively revenue manage, or I wouldn't even necessarily call it effective, but they really only are spending their revenue management time looking 30 days out, sometimes 60, very rarely 90, unless they have a professional revenue manager. And smaller organizations are also incentivized to keep their price higher, right? You see a big difference in behavior between small and large revenue managers. Large revenue managers are obviously much more conservative because they have to fill a lot more rooms, and they can benefit from getting data points early to affect their most important properties. Smaller users, you can't sell your property twice, so you're incentivized to keep the price high. But something I think we see pretty much consistently across the country. It's not true in every market. There's markets that have been really, really competitive over the last few years, and you don't see this. Like Great Smoky Mountains, they're not pushing rate if they're under pressure. Orlando, not pushing, like they're looking out at least 3 or 4 months as a general market, right? This isn't always true for professionals. Professionals tend to look out further, but as a general market, you see, which is filled with hosts, often you'll see stuff like this, which is that, rates are just consistently pushed year over year. Now it makes sense maybe out here. We're not getting a good view because we have the hurricane, but people are just constantly like the rate is consistently significantly higher than it was year over year, whether or not the market is doing better in occupancy or not. And what you tend to see, we don't see it as much here, and I don't think we can glean too much. We might be able to, it's not going to be too interesting pulling this up because of the way Airbnb data has changed. But what we often see is like if we're in September, October's premium will stack up and November's premium will stack up. And by the time you get 3 or 4 months out, the premium is just in like at the market level is super duper high. Now, as a counterpoint to that, we'll see if this shows up here. When we look at professionals, we tend to not see that same level of just overpricing, right? So this is the top 20% of performers in the market, much more conservative. You do see it start to stack up, but not as fast as far. So usually what we see in the top performers in the market, they're looking about twice as far as is the market at large. The market at large maybe only effectively, reasonably responding to the market within 30 days. Then within 60, you see that top performers are kind of looking out that far. And then still you get out there a whole extra season, and usually, the market just in aggregate isn't really responding well. I think that contributes to the booking window quite a bit. I think our industry still has a really hard time like being optimized to where the consumer is actually willing to pay far enough out to make good decisions. And that's usually the advice I'm giving on calls like this, which is whatever you're doing in your regular revenue management practice to like pay attention, double how far out you're doing it and spend less time in the very short term. Like the answer is easy. Like I talk to so many people who are like, I do 2 hours of revenue management a week and I focus on the next 14 days. It's like, okay, well, spend 10 minutes on that because the answer is the same. You're just going to drop the rate generally. Not always. There are a few people who don't, but it's like just cut the rate and go pay attention to where you can make some smaller changes or maybe raise the rate or, ask yourself some questions. That tends to be the advice I give because right now in the industry, it's consistent enough that I can give it everywhere I look. I'm sure my life will get harder when people start to operate a little different. And
I think it has a lot to do with there's a lot of DIY hosts still
yep,
and small co-hosts. Like as far as like what the market consists of, like yeah, there are some bigger players. Like 91 units is not a small player in our market.
no,
Uh, and but the number of people that have 1 or 2 units compared to the number of people who have 91, it's a big difference. Like these people are inexperienced. They don't even understand the concept of revenue management. These people will have flat pricing,
mhm.
225 a night for the next, 6 months. So they are making these numbers appear higher in aggregate, I think.
100%. And I do think it there is an incentive thing. It's not all bad. Like, Andrew, your company has been growing quite a bit. The way you revenue manage when you have less than 50 listings, you should be keeping your price higher, right? You don't have to sell a lot of units in the short term, and you should be gambling more for the higher ADR because you can't sell it again if it sells on a date. But as you scale, your revenue management risk tolerance has to shift. And it shifts into being more conservative. But the benefit of that is you get more data than the rest of the market. You can lead the market if you're priced effectively. There's a number of people who don't like it takes time for people to learn that. And a lot of companies, I think, as they scale, kind of squander that advantage because they keep their rates too high and then they end up always having to sell low to fill. So they both don't get any data and they're potentially worsening their rate position because they have so many to sell. They make bigger cuts in the short term. If you are more conservative and looking further out, you can both mitigate having to do that, but also you can take advantage of knowing what's going on in the market before everyone. Because if we look at this, granted, there's a lot of insecurity in the market, but, you know, it may not be hard to be pretty competitive in the market in this time period, especially knowing that most people are, the market itself is probably overpriced to where the consumer is, given that there is occupancy pressure across this market. And most people probably aren't looking. They're really not being very responsive. There's probably a lot of individual stuff in here because it's not really shifting in response to the fact that occupancy is down this year. Um, if you're just paying attention a little bit in your revenue management practice to this time period out here, sometimes you don't even have to you almost never have to dip below what you were doing. You just have to be more competitive than everyone else around you, you know?
Mhm.
Yeah, no, that's great advice. I actually really needed to hear this today because we have grown quickly, and so it's been hard to put the time into the revenue management that I need to. Because I do all of our sales. I kind of handle a lot. So I'm looking for more people to help with that. But I do have to
Jared said he
shift.
does consulting.
Yeah, I know.
I'll connect with you after
I
this.
heard that. I really need to like shift my mindset on the pricing a little bit more, and I know that I just finally shifted it on like cancellation policy, and that was like something that really helped us. I was super strict, and we've lightened up, and so I need to let go of my high pricing further out, and I know that, so it's good. I'm glad I heard that today. Thank you.
Yeah.
There's
Yeah.
some there's some interesting things that happen when you change your cancellation policy, especially on Airbnb. Your visibility skyrockets.
Yeah, it
Airbnb
did.
does not want you on super strict, and if you remain on super strict, they're going to put you on the last page of the search. It's an interest-based algorithm, and if you are not in line with Airbnb's preferred policies, then they don't want their guests booking with you. They want them booking with other people that give their guest experience a little bit more flexibility.
Yeah, it
So
makes sense.
I hate that about them. I absolutely detest them for this, but yeah, I mean, you're going to get cancellations no matter what. And do you really want to have those arguments with those guests who demand refunds? Like, it's just
Right.
it sucks up more of my management time. So just give them what they want essentially, and then double down on your direct booking and off-platform bookings.
Right.
Take what you can get from them and then keep it moving and abandon your loyalty to those OTAs that don't align with your principles.
That is definitely the goal.
Yeah. I don't think I'm cynical, but I don't know what word would describe this. I don't think people are abandoning the OTAs, but you do have to know, like, see them as a tool. They are marketing dollars.
Mhm.
And you are like, it should be like, you should think of it as part of your marketing budget. They are an advertising agency that you're hiring. They have a lot of firepower, but think of them that way, right? You got to use your marketing, you got to do it, but it is always a choice. And so, how you optimize it, how you want to do whatever, like, I just try not to think about it too. Like I suggest not thinking about it too personally. You know,
Yeah.
like they're just a marketing agency. They do what they do. They have their rules, and you get to choose how much you're distributing to them, like how much you're allotting to them. And sometimes that may be a lot, and sometimes it may be you can make you are in a position or have set up other marketing channels to be able to make the decision to pull back on it or to restrict it. Um, I have no comments on what an ideal cancellation policy is. I would probably, as a consumer, people like looser cancellation policies. It is going to make more turn. So, really just considering what properties you can't afford to do the turn. Like, you know, I think really large homes, what Jared said makes sense. But if you have a home where you also know everyone else is going to have a strict cancellation policy, you can
Right.
put strict cancellation policy on because they can't put
Yeah.
you at the bottom, right? So like really big homes where you just know you can't sell them in the short term. That's actually a very interesting thing. That's what's suffering right now in this shoulder season across the Panhandle and the Gulf in particular, because they have some strength in the fall traditionally. It's these big homes, and it's because of that missing booking window. Basically, if they didn't book super early, they're not booking, and they're also not going to book in the short term because who the hell needs a 10-bedroom home a week before check-in?
Right.
Yeah.
Not very many people. We have one complex that we manage about 30 something, 32 or 3 units in, and it's like right on the Gulf, super high end condos. And I had to keep my cancellation policy there. And we get booking windows of like year out, 6 months out, and they pay top dollar. So those are the only ones I didn't make big changes on. But that's kind of how we like went with the cancellation policy, making the changes where we needed to, maybe the lower end places, but I couldn't there. And the owners didn't, the owners have particular things they like as well. So
Yeah. We do have this is just a short thing, especially because so just so you know, Jared, we also work with consulting clients. So if you ever have a client that's on Wheelhouse, we're happy to start a relationship. We'll, you know, give you one of our account managers. obviously,
We put
for
you on
both
a
if you're our
flyer.
client, but also if you're acting as a consultant for somebody. We provide all of our consultant friends their own account manager and Slack channel, and we communicate with them directly and are happy to coordinate. We do bring business too. Since we don't offer revenue management services, we generally introduce people if we onboard someone and recommend that they might need some help. We also have some pretty interesting business intelligence tools. Which I think both of you might find fairly interesting, particularly I call it like a key data light because it does a few things that key data does, but it's more restricted in that it's very, very focused, but it's faster for that kind of perspective. So what I have here, and this is going to be a little messy at first, I have this set to adjusted occupancy. I'm looking just at my portfolio, but I can filter down into any kind of roll up or down into any custom group. And I have same time last year here in green. And I have this set to the daily level. So basically, I'm showing my daily occupancies again, same time last year. And it's also highlighting the sales in the last 14 days on top of that. So this can be a little messy looking at everything at once, but at a glance, you learn to read this. You can see, and I'm going to shift this to 7, just so we're looking at a little less sales. I don't know why I've got a new computer coming this week. Oh, it's supposed to come today, I think. But at a glance, I can see just like I'm pacing behind here, but sales are about the same year over year. Pacing behind here, I'm pacing up here and selling quite a bit more. It's pretty fat. It's basically just a visualization of the tape chart that highlights the sales at the daily level. I think this is very helpful for looking at like groups of properties across like a bedroom count in a specific region. It's also very, very good for any property that's like a complex because it lets you see where your sales and your pace are at the same time. Generally speaking, I only pull up the same time last year as kind of like a second check. Honestly, just being able to see which days are selling can be exceptionally helpful. You start to notice where like these gaps appear, and it gives you a really good view early out. So you can spot check that kind of like perspective is like, hey, these tend to sell at a really top dollar rate really far out. Well, is that true? And are you doing it more than last year with your current rate strategy? There's a bunch of other things you can do here. You can basically look at a bunch of different KPIs through this view. You don't have to look at it at the daily level. Some people do weekly because it's a little easier on the eyes until you get used to it. And then we have tons of overlaying data. So you could, if you're using Wheelhouse for pricing, actually, even if you're not using Wheelhouse for pricing, you can actually pull up what your rate positions are on average here too. But pretty cool tool. This is actually a free tool. So even if you're not out of your Beyond contract yet, Angie, you can sign up and start to use this. Since you're starting with key data, good place to start. But for anyone looking to just really follow pickup at the daily level, this I think is probably the most efficient tool in the
I'm
industry.
glad you mentioned that because I forgot about this. They showed that to me and I did like that. I will take a look at that.
Yep, it's free, so you can use it before you sign up for us. And Jared, if you have any clients who maybe don't have their own good access to data, or you just want a view where you can really easily see the daily level occupancy and sales, and compared to last year, it's all free. People just have to link their account and you can access it. And super cool thing for you with these clients, if they are on these tools, you could share all their listings to yourself, so you could look at their listings together in the data platform to get an idea of what's going on across all these portfolios. So there's some pretty neat kind of enterprise options there.
It's
Anyway,
funny how
guys,
revenue management works in a sense that, when I do revenue management for other operators, they're not that different than traditional homeowners in a sense that the only thing that they care about is this month's occupancy. They hire you out to make those decisions for them, so they don't have to think about it. And then the moment they don't have to think about it anymore, they redirect all their attention to the other pressing fires in their life. And so as long as you're showing them today plus 30 and showing good occupancy numbers, generally they're pretty happy about that.
yeah, that's interesting. I haven't worked as a consultant in a few years. There, I'm always focused a little like further out. I was like, yeah, great. Like I've just cut the rate. Like, but look at over here. See?
Yeah. Hey, you and I could have a back and forth, and we could talk about the nitty gritty, but it falls deaf on anyone else who doesn't study this daily.
Yeah. Well, if you guys have an opportunity at 11 Pacific today, we have our revenue management roundtable conversation, which is pretty good. We've got a number of great revenue managers, Automizer, Bart Jean. We've got someone from RevZen, we've got someone from Picasa, someone from AvantStay. So some really good revenue managers are going to be on the call. Kind of just like this. That's what this is modeled after. We just talk about what's been happening in the last quarter, this season, next season, and get to hear from a bunch of enterprise revenue managers. So that recording will be up if you can't make it. But it's a great opportunity. And Jared, if you want to build a relationship with Wheelhouse too, we invite revenue managers, whether they're Wheelhouse users or not, onto those roundtables. So we'd love to have you on sometime and chat, particularly since you're in a market with a high season that kind of goes through the end of the year. So it's a little offset from everybody else.
Beautiful. Thanks.
Yeah. I'll have Edson send the playlist with our previous roundtables to both of you. So if you miss it, you can catch it. But that's a pretty good one because you just get to hear what some of these revenue managers who have like a lot of data and a lot of experience are thinking about. And generally, it's not the next 30 days. Like we're talking about like, what am I like when we did it in July, it was like, what am I doing for October already? Like, do we have to think like how are my snowbirds coming on? You can see how far out they're thinking. Because in their mind, like the last minute, it's like it's already done. Like if you're in the last minute, there's not much you can do. So just focus on occupancy and spend your energy elsewhere.
Yep.
Makes
Awesome,
sense.
guys. We really appreciate your time and the conversation. That was great. I haven't had we had a conversation yesterday. There was like 6 people on the call. They didn't turn off their camera or respond to me at all in chat or with words. It was weird.
I think they were all AI bots. They dropped in their note takers.
So weird.
That's funny.
Awesome. Well, I'm glad to be a part of it and look forward to having many more opportunities in the future.
Likewise, we'll probably do Tampa again as we get into probably pretty early because you guys are coming into a stronger season. So I would expect us to do this again around the end of the year when we're pretty solidly in the booking window.
Awesome. Thanks, guys.
Thanks,
Thanks,
guys.
John.
Have a good one. Good to see you, Tevin.